And now for commodities market update, we see oil prices lost ground today, falling from the highest levels in more than a month. Global benchmark Brent crude futures fell 63 cents to $80.17 a barrel, while U.S. West Texas Intermediate crude futures lost about 58 cents to $77.27 a barrel. All right, let's bring in Nosike now to weigh on this matter. Nosike, we're seeing major markets roiled last night. The crypto market, the oil market, all of them. What's going on?
There was the announcement by the U.S. Fed that come March 2022, in 2 months time, it's going to raise interest rates, and it's began the normalization of monetary policy. Given that last year and the year before, it had to, extraordinary monetary policy to galvanize the economic recovery, and about 15% of GDP in terms of money was pumped into the economy, and we saw the impact was inflationary, and obviously it's trying to do what it can to taper inflation, because inflation affects GDP growth. GDP growth in the US affects GDP growth globally. So the Fed is poised to take action, and markets are reacting to that action. Obviously, when the Fed decides to raise, when it raises interest rates in March, the dollar will strengthen. The dollar has an inverse relationship with commodities and markets, basically. So if the dollar strengthens, we expect commodity prices to weaken. That's oil, cocoa, gold even. So even it's not just
even the safe haven.
Yeah, safe haven. I mean, inflation, in times of inflationary times, high inflation, people would go to a safe haven. They will buy gold. And but now we're clear that the Fed is going to raise interest rates, so everyone is looking for. I mean, yields are up. Yields in the U.S. are up, so looking for the highest, where you can get the highest return. So people are leaving gold, leaving commodities. So the prices, it's some turbulence in the market, because you have some factors underpinning oil prices at the moment. Yes, OPEC said that they would continue with their plan to pumping an extra 400,000 barrels of oil every month up until sometime in July, where they would have basically on paper put back 10 million barrels of oil per day. But the markets know that some OPEC members have capacity constraints, like Nigeria has an issue with, had declared a force majeure sometime last week, or two weeks ago. And Libya, they have like 200,000 barrels of oil taken off the market due to some issues with some pipelines. So, OPEC Plus, they have capacity constraints, about 600 and 700,000 barrels per day. So that is underpinning the outlook in the market. And then again, the issues of U.S. stockpiles, fuel stockpiles in the U.S. It's the picture being painted basically is that demand is slowing because of the Omicron virus. There were about 1 million cases reported earlier in the week. That's like twice the previous peak of about 500,000 in a day. That's 1 million cases were reported on Monday. So people are beginning to say, okay, if there's a surge in Omicron, and seeing that stockpiles are not falling as much as we thought they would fall, so there's that slide in demand, meaning that people are not taking journeys like they ordinarily would. So typically that sort of news would impact the market significantly. But you have underpinning it is the news from the U.S. Fed. The underpinning is also the fact that OPEC Plus have capacity constraints and are unlikely to be short-handed by about 600 to 700,000 per day. So leaving oil prices above 80, which, like you pointed out, is almost a 2-month high at the moment. So yeah, it's positive for oil.
And I remember the Fed actually hinted about 3 hikes.
Yeah.
This year, and this is the first.
This is the announcement of the first.
And we're getting this reaction from the market. So when the other ones come, how do you see the markets actually?
The fact that we know that they're coming. The thing about markets is that the expectations are built into reactions. We know that okay, this is the first of 3. This is March, and we know it's going to happen. So all the other markets are factoring into, like you said, the crypto space. Okay, what's going to happen? There's still the factors that underpin the crypto market are still the things that you can't really hold on to. It's supply and it's demand. We don't know who has the supply. We don't know who has the demand. We don't know what announcements they're making. We don't know, those things that ordinarily underpin a market. We don't really have. It's not clearly stated. So there's a lot of volatility in the crypto space. So that announcement by the U.S. Fed and yields rising, there's a lot of movement from the crypto space. So that's going to happen over the course of the year, and depending on how not just how even emerging markets respond. Because if you raise rates in the US, what will happen is that you see a lot of liquidity, a lot of funds, capital flow reversals from emerging markets going back to advanced economies because of higher yields. So these emerging markets may raise their interest rates to attract funds back to their economies, and you might see a lot of currency volatility in emerging markets and central banks responding, trying to protect their own interests. So there's a lot that is poised to happen over the course of the year, and it'll be interesting to watch.
Is this safe to call 2022 maybe the year of the bear?
I don't think so. I honestly don't think so at the moment. Like I said, a lot of things are already being factored in, and so I mean, oil prices. We have forecasts of outlandish forecasts of up to $120 a barrel that may be underpinned by. I mean, even now the outlook on the demand side because of Omicron is looking as if so people are asking questions. How transmissible is this disease? Is it like the previous ones? Is it as the vaccines available, are they as effective on the Omicron? And there's news of even a newer variant. I'm uncertain as to what the name is, but
it's quite an unusual name.
Quite an unusual name. So so all those factors will come into play. But we know that the world is learning to live with the pandemic, and we expect the global recovery to continue. Even OPEC has come out to announce that they expect oil demand to reach 100 million barrels a day this year. Total demand for the year, 100 million barrels per day, as opposed to somewhere about 95 million barrels a day last year. So that's an increase in demand. So you have supply constraints. On the supply side, have constraints. So that's positive for oil. So it's not calling it a year of the bear. I think it's too early to say.
Too early to say.
It's too early to call.
All right. So manufacturing purchasing manager index fell from 57.4 to about 55.9 December. First of its kind. You'd expect festivities.
Yes.
The manufacturers will be more busy. What do you think drove this?
Basically, it's the uncertainty surrounding the Omicron. When we heard news of the Omicron in late November, early December, manufacturers, they had to take a step back. Okay, because you begin to wait. There's on the supply side from them. Okay, like the questions I raised earlier, how transmissible is this disease? How is the government going to react? Are there going to be restrictions? Are there going to be
the dreaded word lockdown?
Lockdown, supply chain constraints. All those scenarios were being painted, and you would cut down on. Okay, you don't want to overproduce and let and then again there's the demand side. We know that the Nigerian consumer has been embattled, stagnating incomes, high inflation. So there's also that is supposed to underpin whatever we produce, people will buy. So that consumption being lower, manufacturing output fell to basically try to match the consumption. So obviously there's forex constraints as well. The constraints that existed before the Omicron virus, all those things, all contrived to give us a PMI that was lower, a 7-year low at this time of the year.
And Eurozone wasn't left out. See, that one fell by 53.3 points, hitting a 9-month low too.
Yes, the services sector was chiefly responsible for this. So as typically people would go out, with the economy is open, people would go out to restaurants and everywhere, and the fear of the Omicron virus, a new surge, and the numbers are rising, so people are more laid back, people are home, people are anticipating movement restrictions and all of that. So all of that came into play, and we saw the services sector take the biggest hit in the Eurozone.
All right, I see also one down at the food commodities are up, from chicken, turkey, rice, And I'm thinking festivities are over. Why the
Oh
prices
yeah, I
still
mean
elevated?
festivities are over for some people. Some people still have till the end of till Sunday. I mean work for most people starts on Monday. But the
Right.
economy for the manufacturers, most people
I thought
for
everyone was
we
like me, to
expect
be honest.
everyone was like you. We expect forex demand, for instance, to pick up next week. Forex supply, CBN will start its intervention in forex market by next week. So we expect as the economy picks up. The prices, the festive season demand is still keeping prices elevated. But as the economy picks up, as the festivities end, the demand would would fall and the prices would taper down as well. But there's the fact that we're entering the planting season,
Right.
so to speak. There's that effect, the planting season effect, will keep prices a bit elevated.
All right, and also the Naira weakened at the parallel market, about 569 to the dollar. What's happening in that space?
Okay, like I said, shall I say, manufacturing activities, business activities resume next week. So right now, there's as much as there's low dollar demand, there's also low dollar supply. There's also this recent official devaluation by the CBN. No, last year something similar happened, and after a while, they took it back to what it was. It was 379. It went to 410. They took it back to 379. So the market is even waiting to see if this is a proper policy shift, so that the market forces can react appropriately. So, and if by next week we expect to see increased forex supply at the official market, so that manufacturers can get forex. We had President Buhari come out sometime last week and gave a directive in quotes to the CBN to supply more forex to the manufacturers. If manufacturers can get forex at the official rate of 435 as opposed to the parallel market, you have less demand at the parallel market, and we'll probably see an appreciation in that market and continuous convergence of the two major markets, the official and the parallel market.
All right, it seems like we'll still be having the same conversations from 2021, the way it's looking with Forex and all of that. Nasikin Wajide, thank you so much. Analyst, Financial Derivatives Company, thank you. Always great to have you.